Good morning, good morning. Whoops. What is this? Why is it doing that? Okay, I think, I don't know why this is making this noise. Everything's off anyway. Okay. All right, guys, I don't know what's doing here. This noise is coming back at me. I have to make the best of it for now. I don't know. Everything's disconnected over here on the other side. All right. Wow. I think I figured it out. Nope. Okay, I think I got it. All right. Okay, so the markets have woke up in a grouchy mood here this morning. This VRX has been doing well, gapping down here, so I'm putting this on my intraday short list, but we'll see what becomes of that. S&P is down, still in an uptrend. You know, we'll see where it finds some support. So it's around just below Friday's low where buyers stepped up. You know, there was the options expiration, so maybe what effect that had going into the weekend, but we'll see. I mean, nothing wrong with this pattern. Pulling back on the daily. We'll see what if happens if it stops near this bottoming tail, which is usually right there. Right. Let's just see. Yeah, that's the bottoming tail right there. So we'll see in that area, this red line. Take it away. That would be a target area for the futures to pull back into. We'll see if buyers want to step up there. The 20 MA is rising into that area, and that would be a normal pullback within this pattern. Now, the spiders, you know, they had that gap down on Friday, which was a sizable gap down, about 0.75%, which is pretty big. 1% is extreme. And you know, it sold off a bit further into this low. It bounced from there up into resistance, and now, you know, it continued the downtrend. You could see the rounding top here, which is those 4 days up there where it was going sideways. So got this rounding top. It's pulled back. Now what we need to see from the bullish point of view is, okay, if it pulls back into that area with the blue line, makes sense. What was resistance becomes support, gets down there, and then we look for, well, how long it may take to form some type of a bottom, whether it's a V bottom or a W bottom. We'll see how it all forms. All right. But this is where we would consider being buyers with a bullish pattern. excuse me, assuming it gets down there. Oh, if it slices right through it, well, we'll see. We'll take that when it comes, and if that happens. But that's the obvious place for prices to work their way down to, and then attempt to stabilize, whatever that's going to look like. Meaning, it could look something like this. It could look like that. And that's one of the things that you can't get caught up on, is like when you learn a pattern, and I struggled with that for a little while, because in the past, going back a long time ago, right, very long, more than 10, 15 years ago, everything was a W bottom. The markets had big corrections. And then, as the internet, I guess, grew, information grew faster, and high frequency trading and such, you still got them, but not as often as far as the market goes during sell-offs. There were these V bottoms, which were kind of unusual to see the market sell off in that way, in a powerful way, and then just stop and turn and go right back up again. So markets change, right? There's a lesson there. So when it gets down to support, we really don't know what kind of pattern it's going to form. Qs coming back in, down toward the bottom of the breakout bar. So it looks like we're getting a breakout failure here, and we'll see if that holds. It doesn't look like it will, but you've got the wide range bar taking out these highs. The inside bar, it's already trading under the low of the inside bar, which, if we were long, that would be get out of town and reevaluate. That's not what's supposed to happen. Meaning, after a short resting period, a bottoming tail bar, a move above those highs are not supposed to result in a move back under the wide range bar. So reevaluate, even though it's in an uptrend. I mean, if you're a buyer over here, the other alternative is, okay, I'm going to stick it out because it's in an uptrend, and I'll sell an out of the money call. Lower that, and give up the upside if Mr. Schizo just decides to hold and rip back up again. But we trade based on what is, not on what might be. So right now, what is a short-term bearish pattern within an uptrend, and we'll see how far it pulls back. Here's the bottom of that low here, and we see it's beginning to stabilize already, and we'll see what happens. The assumption is at the moment that it's not going to hold, other than short term, because of what we see in the S&P. That's not near some support yet, but this has been showing relative strength. But this is a pretty reliable pattern of when you see a breakout bar failure like that it will go lower. And I suspect a move down to here, 20 MA again, but we'll day by day. The Dow been weaker, came right up into major resistance there. And this is where the wrong way option traders started loading up on calls. And I wrote about this in the Monday advisory letter. It's like, really, why here? It's just what they do. I've seen it for decades. The market moves up. It's obvious. It seems like the coast is clear. There's going to be easy money on the long side, and all of a sudden option traders just go hog wild with bullish bets, and that starts some corrective action. It could have went sideways, chopped around, and now it's pulled back, and we'll see. That started to unwind on a day-to-day basis, but the moving average of that equity put call ratio has not retraced yet. So that being said, this pullback to this area is what I would expect under a normal pullback, meaning the size of the retracement. And you can see here this overlapping opens and closes. That is the support area, which is right there. There's a concept from the MTS course, Master Trader Technical Strategies. Overlapping opens and closes will look like a base in a smaller time frame. And that's why if you're looking at a higher time frame and you see that kind of price action, you realize that there's going to be some type of consolidation in a lower time frame, and that is where buyers should want to step up. So, it's an area. So I'll put that there. Maybe right around there is where we see some stabilization today. And if you're looking at the diamonds, where are my diamonds? I guess I don't have them in the list. If you don't have futures, so that would be your reference point, somewhere around there, 247, 50-ish, 248, could overshoot a little bit, 247 to 258 would be where we would look for those to begin to stabilize. And again, this kind of a pattern, we don't know. We'll see. But that's the support area. Right in there. See if it stabilizes. And the Russell. So the Russell has been leading the way up, and now a gap down to the low, in the area of the low of this bottoming tail in this base. Clearly bearish, right? Gapping down to that level there. We'll see. A gap down like that is one in which, unless it just stops and rips to the upside, 30-minute low, could be 15-minute, short that, looking to go lower. So I'll see if that sets up. That's pretty bearish when you see a gap below, not only a green bar, which it could be a wide range bar, this is a bottoming tail bar, but a gap below either one of those is bearish. Now a gap below or to the low of 4 days. Well, so here's the other part that is not perfect, meaning it maybe not a huge move would happen before some stabilization. Probably the next reference point of support isn't that far away. So but for a day trade, it would be okay, and then we see what happens. Now, when we look at broader markets like this, right? As I'm going through this, I'm following all of them. And I know where my reference points are with all of them. And I'll have alerts set on all of them. And sometimes one hits and the other hits, or one hits and the other one isn't quite there yet. But being aware of where the broader markets reference points of support are and resistance are is the starting point of knowing when a possible turn will happen. Transports, which did great on Friday after the gap down, they're holding up here. They're actually flat. Right? So it looks like nothing going on. That's from Friday. So you can see here nothing happened, and that's actually a good sign that the transports are showing some relative strength. If this was gapping down to this low, that wouldn't be good. Right? Now we have, what's oil doing? Oil is actually up, reversing here after poking down through that low. But we'll see if this can get, how far it can get up into this void here. But this is what helped the transports have a great day on Friday. And now we'll see if this can reach, it would be amazing if this was to retrace all the way back up into the top of this wide range bar. As I always say, that halfway mark is about as far as we'd like to see it go into a wide range bar. So maybe into that area. And now here is, my rule for a situation like this. It's a bearish pattern. This drops, it creates a void. It's like a climactic move. It's so big. I don't short V tops. I look for M tops. So in other words, this is in reality, this is coming into minor resistance, but that's subjective. In reality, there's nothing directly to the left, So what I want is for this to create resistance, and this is a scenario where I want it to form an M top if I'm going to short a pattern like that, regardless of what it is. Crude oil, XYZ, euro, doesn't matter. Applicable to everything. Bonds continue to bounce up a little bit here. Not much whippy tails and overlapping bars. Stay away. Gold got slammed on Friday and just hanging out here near the lows. We've avoided gold here for a long time here, and maybe it's worth a look on the short side, but yeah, I don't, but it's a wide range bar again. Leave it alone for a little bit. Let's see what it does for a day or two. And I think I'm gonna let Dan take over and open positions, and we have any problem childs and gappers. All yours, Dan. And Dan is with us.
Yes, sir. Good morning. All right. Good morning, everyone. Yeah, let's take a look at our opens. And we actually closed out a lot last week. And we were aware of this toppy market. We were tightening stops and so forth. And so let's again take a look at our opens here. And there's no problem children jumping out at me, but let's take a look at them. WLL bear call spread gapping up a tiny bit, but let's see, I think we covered half already, but if not, we will be today. ITA, that's the aerospace ETF that we shorted with this brick wall on the weekly. We've already covered half. And at first I thought it was gapping down here, $2 or so, and then we would have gone ahead and taken the back half, but I can't tell. So we'll just hang out here, HEAR. Bull put spread, half lot, looks fine. ZS, we have a put spread way the heck down at the $30 strike. STX, we have an iron condor. We want it to stay range bound. RCL, we have a condor. When it turned bullish, nothing to do right now. Costco down a little bit, which is totally fine. And our put spread, XPO, I kind of can't tell where it is. I can't tell, but it's a bullish pattern. I actually added into the close Friday. UAL put spread, can't tell where volume is, but if it opens flat in this weak market, then that's very bullish. ITA we just talked about, so that's a duplicate. H covered call. There's no volume, can't tell. ITB, we're looking to start scaling into that in our ETF trader. USNA, I was just watching this from last week. Wix, I nibbled a little bit myself on Friday, but it's not an official trade. We're looking at spot as a weekly put spread, if it can take out Friday's high. This is one I just had left over on my watch list.